Welcome back. Well, the last trading day of the year and the SGX Nifty is rewarding bulls handsomely with a 60-point gain. Let's see how it goes from here. Anuj is with us to talk about the markets, of course, his New Year plans as well. Anuj, how's it looking for you?
Quite good, Sonia. But you know what? After you have two daughters and two dogs, the only thing you can do is just stay at home. And anyway, actually, I prefer to stay home on the New Year Eve and just have some celebrations with family and friends.
Oh,
what about
that's the
you?
best way
What
to do
about
it.
you?
Same thing. Celebration with family and friends is the only way to be, right?
Sorry, you cats as well, right?
No, it's, two dogs. Yeah.
Two dogs. Sorry,
Yeah.
sorry. I mean, cats versus
That's a
dogs.
hectic scene, huh? Two kids, two dogs.
Yeah.
Hopefully just one wife, right?
Sonia is in a mood.
Okay.
What about the markets, Anuj?
Yeah, the market is very strong actually, and even yesterday, the market actually surprised everyone and had a big rally, especially on the bank Nifty. And the US market also had a very strong session. How much of it was preempted by our market? That's the big question, right? The year-end factor playing out in most markets. In America, you normally see this play out in the last couple of days. The NAV management, that is, the real trend should emerge in 2023 rather. But a couple of points are clear. One is Bank Nifty is in a powerful buy on dips mode. Yesterday also, from 42,400, it had an 800-point rally. And the China theme is well and truly intact. The metals index this week is up 7% and within 2% of a lifetime high. And if it does that, then my sense is it can give you another 10% easily. What that would also mean is autos and FMCGs perhaps may take a bit of a backseat. On the Nifty, you open at 20-day exponential moving average of 18,273 and the 20-day simple moving average is 18,378. This is not a zone in which you want to buy. Actually, this is a zone in which you want to take some money home and maybe even if you're adventurous, try a short trade. On the Bank Nifty, it's above all moving averages. And I think if it dips towards 42,930, which was the erstwhile resistance, that now acts as a bit of a support. And my sense is you'll see profit taking somewhere around 43,500 on the Bank Nifty.
Okay, thanks a lot, Anuj, for that. Happy New Year to you and have a great weekend. Well, let's go back to the technical experts to get some ideas out of the way. Kush, let me start with you. What's on your list today, last day of the year? What are you buying? What are you selling?
Well, only buying for now. And as Anuj just said, steel sector and the metal pack is doing fabulously well. So my first pick is from the steel space. It's Tata Steel. We've seen quite a bit of resilience in the stock, and the bounce back also has been very sharp. I expect this move to continue up until 116 levels. A fresh entry here, and the stop loss would be at 109. A quick disclaimer: I hold a personal position also in this stock. The second pick is from the banking and the financial space, and has to be SBI. The stock has also seen a fair bit of rebound. It's comfortably now trading above its short-term averages. This move could continue to 625 levels, and the stop loss would be at 600.
Okay, all right. Thanks very much for that. Mitesh, what about you?
I have more of buy calls for the time being. Have a buy on Axis Bank with a stop at 925 for targets of 955. Couple of metal names. I've been very bullish on them for the last 3-4 days since that big reversal happened. So Tata Steel is a buy with a stop at 109.5 for a target of 116, which was the previous high for the stock, and then maybe even higher. JSW Steel is a buy with a stop below 760 for a target of around 792 on the upside, and one sell call that's on granules. That's a sell with a stop at 327 for targets of 310.
All right. Thanks a lot for that. Well, let's go across to Chandan Taparia now. He's a derivatives and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. What's the sense you're getting about the Nifty? And just can you take us through your key stocks for the day?
Good morning, Sonia, Mangalam and Prasant. First of all, thanks for all your support in 2022 and wishing you, entire team and all the viewers a very happy, healthy and wealthy 2023. In this year, we have seen that Nifty has moved by around 4.82%. In this series, we are slightly down by 1.59%, but the good part is that declines were being bought. And in this, the sector and the stock specific movement was clearly visible. Especially our Bank Nifty has rallied by more than 22%. Metal index has moved up, auto has moved up. And we believe the same theme likely to continue in 2023. Now, if I look at the rollover data, as yesterday we ended the December series, Nifty has seen the rollover of around 79.21%, which is slightly higher than 3 months average, but slightly lower than last month rollover. But here the important part is roll cost is slightly lower. we have seen 0.6% rollover compared to 0.9%. So overall, long built up and better rollover indicate that longs are intact, bullish momentum could continue, but lower roll cost indicate that long aggression missing. So to conclude, we have positive to range bound bias in the market. We believe that recent bottom of 17,777 is going to act as a firm bottom as of now, and supports are likely to shift higher. And on immediate basis, we believe that 18,081 could act as a support to drive this move towards 18,442 and then knock towards the new lifetime high of 18,887. Now talking about Bank Nifty index, which really outperformed, rallied well by 22% in this year. Even in the series when Nifty is slightly down, your Bank Nifty is slightly up. And on last trading session, we have seen huge short covering as well. So Bank Nifty has 86% rollover, higher rollover with higher open interest, clearly indicates outperformance and bullish momentum could continue. And we believe that with support of 42,750, your Bank Nifty has potential to head towards 44,000 and 44,151. That is the lifetime here. Now talking about stock specific trade setup, we have first buy recommendation, that is SBI. This is one of the strongest counter. We have seen 92% rollover in the counter. Here we have seen some short covering, open interest has fallen down by around 14% in last 4 days, and stock has really witnessed a V-shaped recovery. So we believe this momentum could continue, led by outperformance in the banking name. So recommending to buy on SBI with a stop loss of 598, and here we have a target towards 636. Second trading idea from metal space, Nifty Metal has really done well even after some consolidation of last few weeks. Jindal Steel is one of the strongest counter, 95% rollover, some short covering, delivery based buying, put writing clearly indicate that momentum could continue. One can buy with support of 575 to drive this move to our 615 level. Last trading idea, we cannot forget about the auto theme, which likely to do well selectively in 2023, and our preferred pick is always TVS Motor, which really done well in 2022. And after some consolidation, again it is all set to move on higher side. We have seen significant open interest addition in this series, and especially one day we have seen 50% open interest at the beginning of this series, which clearly indicates that long accumulation happened that could drive the momentum. So recommending to buy with a stop loss of 1075 to cheer the next year for target towards 1150 and positional toward 1250 levels.
All right, Chandan, thanks a lot for joining in, giving us your views on the index, giving us your views on the Nifty Bank, as well as the three stocks that you mentioned, TVS Motors, SBI, and one from the metals pack. You thanked us for supporting you through the year, etc. But, you know, thank you is not the only thing we will accept. It is winter. You hail from Jodhpur, so some kachoris and ghevar is something that both Sonia and I would love to eat as well. Though Sonia will eat a lot less than probably what I would. So thank you for joining.
I was just going to say that, you know, that it's only you eating the kachori and ghevar, not me.
You have to, I mean, you can't not eat the sweets, etc. Rajasthani food, very good. But
surely,
thank you.
Definitely we'll enjoy and definitely I'll pass through. And have a great 2023. Mangalam to you, Sonia, entire team and family as well. Thanks for being with us in 2022. And let's rock in 2023 to help so many investor trader to make their wealth and make the India to the next destiny.
All right, wish you the same. Thank you, Chandan, for joining in. Let's move on to the next discussion then. We have, you know, an interesting one lined up with Balaji Subramanian, because sources tell us that Bharti Airtel is looking to list their payments bank. Remember, Airtel's payments bank is the only profitable fintech player in the industry, has access to Bharti's unique user base across digital assets. Balaji tracks the stock very closely. He's the Vice President at IIFL Securities. Balaji, thank you for joining in. Season's greetings. Yesterday, there was a big move intraday from intraday lows on Bharti Airtel. Just wanted to know, in your you know, model, have you ascribed any sort of value to the payments bank? And now that it is listing separately, would you you know, tell us how much it could mean in their overall scheme of things?
Thanks. Good morning, and nice to be on the call again. On yesterday's development, I don't think a lot of people are specifically ascribing value to Airtel Payments Bank. But having said that, that has been ramping up quite well. And as disclosed by the company, it has over 50 million monthly transacting users with a GMV of 50,000 crores per quarter. And they are also profitable, with the revenue being somewhere around 300 crores per quarter, and they make a mid-single-digit EBITDA margin. Having said that, clearly one of the reasons why this business is profitable for Bharti is that they do have a large captive subscriber base, and that results in pretty insignificant customer acquisition cost, which is typically the a main cost for an entity like this. And it also complements the core business pretty well, because it results in improved stickiness and reduced churn. Having said that, one
Balaji?
parallel to
Yeah. No, I just want to understand you. This whole payment space is a very competitive space. How do you see Airtel scaling up, and do you see it match up to, the largest player, Paytm?
See, currently, the kind of product portfolio that Paytm has got is a lot wider than what someone like Airtel Payments Bank would have got. And Airtel Payments Bank, frankly, entered the space a little later. So I think one will have to see, how Bharti kind of uses its data lake of over 300 million customers to its advantage. But having said that, I think if one were to kind of draw a parallel with where Fino Paytech is trading at, then I would think assuming some similar multiple, assuming that considering that both the entities have not very different GMVs and a similar revenue run rate. I think something like somewhere between 2 to 3,000 crores will be a fair value if and when the IPO happens. And in that case, I think we don't know, how much Bharti might be planning to offload, and what would be the primary and secondary components, etc. But I think something like somewhere around 500 crores is what Bharti might end up netting, and of course over a period of time, they will also have the option of selling more into the market. And at probably higher valuations if the payments bank business scales up pretty well. So one will have to see, at least in the near term, it does provide some room for value unlock.
Okay, just stay on for a second. I do have another question for you, but in the meantime, I just have to get some 9-10 trading calls out of the way. The Nifty in pre-opening has settled higher by about 68 odd points. The Sensex up 200 odd points. Tata Motors, Bajaj, Finserv, Divi's Laboratories, a couple of stocks that are doing well. Mitesh, let me come to you. What's the big call at 9-10?
So I'll go with a buy on JSW Steel, the stop at 760 for a first target of 792 up on the upside. Eventually, I think it can go to about 805 as well.
Okay. All right. That's on JSW Steel. Balaji, just coming back before we close the discussion, it's very commendable that, Airtel Payments Bank is already profitable, given the kind of competition there is in the system. But do you think margins can improve for the space overall? I mean, they had sub 5% margins in the quarter gone by. What's the expectation now?
See, I think in the very near term, they would be focused on expanding the business. So I think the focus would be more on growth rather than margins at this point in time. But having said that, as the scale builds up, one should expect the margins to trend upwards. But eventually, where it settles at, something which is probably a little bit premature to call.
All right, we will leave it at that. Balaji, thanks a lot for joining in and taking us through that, the Airtel Payments Bank and the prospects for the future. Well, the pre-opening rates have settled higher, actually, 200 points higher on the Sensex. It's a lot of the technology stocks that are doing well this morning. There's a little bit of a bump up there. Tech Mahindra, Infosys, all looking pretty good. So we'll keep our eye out on that. But let's go across to Sonal. She's standing by. She has a note on GAIL that she's tracking this morning. Sonal, over to you.
Good morning. Thanks a lot for that. Well, it is a positive update that's coming in for GAIL, because we've been talking about how US prices, that's the Henry Hub prices, they've almost halved. They are now at $4.50 per MMBTU versus peak of almost $10 per MMBTU back in August. And they are estimating that now marketing margins in the US gas for GAIL would be around $1.1 per MMBTU versus the negative negative $2 that the company was making earlier because of higher gas prices. They expect current margins for GAIL to sustain, and higher availability of domestic gas that GAIL is also seeing will help fill the Gazprom contract shortfall that GAIL has been facing in last couple of months. On the back of this, they have increased FY23 PAT estimates by 9%. They have kept FY24 estimates as is, that is constant. Stock also is attractively valued, and that's why they have a buy rating on the stock with a target price of 117 rupees a share.
All right, thanks a lot for that, Sonal. Well, just get ready for the last trading day of the year. We're counting down to the opening. Looks like 18,200 is something that could perhaps hold on the upside. At least that's what the pre-opening rates are indicating, and led by a lot of these technology names. There's also names like Tata Motors, Bajaj Finserv, Divi's Labs, Tata Steel, Hindalco that are all trending in the green right now. A couple of things that we did mention, it's been a very narrow trading range for the market between 17,800 and 18,200, and the level to watch now on the upside is the 50-day moving average of 18,250. So let's see if that gets scaled up. The flows have been slightly on the muted side. So there you have it. That's the first tick on the index. Up almost 73 points. In fact, not a bad opening at all. Led by Tata Motors, you have Bajaj Finserv, Divi's Labs, Tata Steel, Hindalco, all up in excess of 1%. In fact, technology is doing well. Tech Mahindra, Wipro, Infosys, all three are in the green, up about 1%. And then you have banking, that's not too bad. SBI is topping the charts this morning. In fact, the Bank Nifty is up 150 points as well. The market breadth is solid at 9:1 in favor of the advances. And a lot of big movers, Apollo Hospitals, ONGC, Coal India, Kotak Mahindra Bank, all trending in the green right now. In fact, the biggest gainer this month has been Hindalco, which is up almost about 6% Tata Steel as well, about 6% higher this month. And both those stocks continue to trend higher. So steel, post-China reopening, the entire steel pack has been doing well. JSW Steel, it was one of Mitesh's ideas as well, that is in the green. What's in the red this morning? M&M, NTPC, HDFC Bank, Nestle and ICICI Bank. Just a smidge really, nothing too alarming in terms of a fall, but just trending slightly in the red. Otherwise, it's a decent opening. I mean, it's a slow, you can expect it to be a slow day considering it's the last day of the year. But for that, not too bad. Slight bit of green on the screen.
Slight bit of green on the screen, and the broader markets actually look much better. We'll await, settling of the market breadth. The opening, of course, has been 2,000 stocks in the green for about 200 in the red. So to that extent, it's a 10:1 advance decline ratio, though we will await settling of that. The broader market is doing much better. Inox Green is among the top gainers, up almost 6% Eureka Forbes is the other one, up around 5.5%. We're seeing big moves on Go Fashion as well. This morning there was a note from Equirus, a positive note indicating a 27% upside on that one. So Go Fashion is the other one which is sitting with a gain of almost 3.5–4%. BKG hits upper circuit for the 5th consecutive session, and with this the stock has now hit a fresh record high post listing, 447 rupees on that stock, up 27% this week. Lotus Chocolate, the one where Reliance bought 51% stake for about 113 rupees per share and an open offer at 115, obviously benefits from the up move that we're seeing on that counter. The ownership change will help them. Craftsman Auto, there is a deal out there, so positive on that counter too. Among the losers in the broader markets, we do have a few of them. We have TVS Motors, which is down a smidge, about 0.75%. Pidilite lower by about 0.5% after seeing a gain of almost 5% this week. Cummins, Pfizer, I mean, losses are far and few in between, and the quantum of losses also, most of them sub 1%. So looks like a strong opening from the broader market standpoint as well. We'll watch out for cash stocks in the second half of trade, primarily because institutional activity is low. So we may see some moves out there. Prashant.
All right. So things are looking decent, but it's a slower kind of a start, more subdued start. That's to be expected as well, given the ferocity of the move that we've had. The high today, by the way, is 18,264. The open was 18,259, and we are somewhere in the, somewhere off those levels, 18,221 on the index. Let me just quickly highlight a few other names before we bring our guest in. So SAIL is up 2.5%. Steel Authority of India is coming up as one of the top volume gainers at about 83. Indian Overseas Bank is up 4% on decent gains. PSU Banks up and down all over the place after, the clean uptrend broke middle of December. Mazgaon Dock is up 3%. I think Mazgaon, Cochin Shipyard, Garden Reach, these shipbuilders, they've all been dockyards. They've all been doing well. There is Fact, which is up 5%. That is fertilizer company. Coforge is up 3.5%. These are the biggest volume gainers. Shriram Finance lost almost 5%, 6%. It came off, at one point it was down 10%, but came up quite a bit by close. It's up 2.5%, so reversing some of those losses. UCO Bank is up 3%. Skipper, which is the power transmission space, that was up 10% yesterday. It's starting another 3% higher. So there are some of these follow-through moves. And there is Craftsman Auto. I mean, that's I think, Coimbatore-based auto ancillary company, 4.5%, 5%, 3,400 on Craftsman Auto, which is coming up. So it's a decent kind of start for the broader space. 1,600 stocks are higher, and you only have about 200 stocks which are in the red. Sonia?
I just want to make one mention on Craftsman Auto. The company has acquired 76% of DR Axie in India. They've paid 375 crores. Now, this is an auto component manufacturer that they've acquired. They manufacture aluminum cylinder heads, which is used in the passenger vehicle space. And it's had very good financials, the company that they've acquired. So I guess that's the reason the stock is up and about today.
All right. It's a good company, good financials, tightly run. It's done very well. I mean, I think price was about a year and a half, around 1,800, 1,700. And it's basically more than doubled from those levels. 42 points on the Nifty, 18,200. Mahesh Nadurkar is now joining us. He's India strategist at Jefferies. Mahesh, great to have you with us here. Thank you very much for your time. First up, I mean, in case we don't say it later, Happy New Year to you, your family, your team, from all of us here at CNBC-TV18. Mahesh, how are things looking as we head into 2023? In a way, not a consensus, but expectations this time as we begin this new year are muted. Yesterday we had Nilesh Shah from Kotak who said that bond returns and equity returns perhaps should get closer, not converge, but should get substantially closer into 23. What's your sense?
First of all, thanks a lot, and best wishes to you and your team as well. Yeah, you're right. We're beginning the year. Actually, this actually reminds me very much, about the beginning of the year 2022 as well. The markets were more or less at similar levels, and were looking expensive. Today, markets are not looking that expensive, by the way, right? Because 1 year down, we've seen earnings growth catching up by about 10, 12%, 13%, and the markets are where it was about a year ago. So in that sense, we've seen some moderation in the valuations. And I would say that to a large extent, one of the biggest worries of CY22 has played out, which is that of rising interest rates globally, as well as in India. And while we can argue about whether the Fed, ends at 5% or 5.25 or 5.5, but we are essentially talking about 25, 50 basis points here and there. Large bulk of the rate hikes, I would say 80% of the rate hikes in the current cycle are now behind us. And the same thing, is true with India as well. So, the normal worry about the rates going up, usually impacting the market P and the stock P multiples, a large part of that, that rate hike worries are now behind us. So I would actually say that, yes, the global, slowdown clouds are much more stronger today. But the rate hike worries are behind. So it's now looking like, a buy on dips kind of a market to me. Yes, you're right. We are not likely to see, runaway returns. But so was the case in the last 12 months as well. And I would say maybe, what you mentioned, looks right that, maybe over the next 12 months or so, the fixed income and the equities will probably give similar kind of returns on an overall basis.
Okay, so you're saying that this is a buy on dips market for you right now?
Yes, absolutely. Because, I believe that from the current levels, maybe the upside is about, let's say, 5-7% from a 12-month perspective.
Okay.
But if you were to get, some dips, then, yeah, the expected returns will go up.
All right, that's good to hear. starting the interview on an optimistic note and perhaps ending the year on an optimistic note as well. Mahesh, good morning. In the year gone by, the two spaces that did the best were metals, which went up, I think, about 20%, and banks, of course. Banks has become a bit of an overcrowded trade, don't you think? And what about metals? Do you think these two pockets will continue to outperform in the year to come?
Yeah, banks has definitely been an overcrowded trade. Both the foreign institutional investors as well as the domestic investors are significantly overweight, on this space. And that's why we are seeing the investors are now willing to go down the curve in terms of the valuations, and there's a search for, where the valuations are looking more attractive. But by the way, while the trade is overcrowded, most of the leading banks, the private sector banks, are not overvalued or not expensive, so to speak. In fact, if you look at the historical valuation comparison, many of the large private sector banks are trading at a discount to the historical PE or PB multiples. So it's not looking that expensive, as such, going by the last 10-year history, etc. But you're right. And because of that overcrowded trade, the investors are going down the curve in terms of the multiples and maybe willing to compromise somewhat on the quality as well. And, in that context, and also in the context of where the NPL cycle is, PSU banks are looking like, a good bet. Historically, the investors have looked at only some of the large state-owned banks, but I think there is an reasonable outlook from for the mid-cap PSU banks as well. So that's one space on the banking side. So we remain positive there. On metals, yes, we have actually been quite negative underweight on this theme for most part of the year. We've seen a rally over the last 2 to 3 months. But the rally that we've seen in Indian stocks is actually still much lower than what we've seen elsewhere in the world. And the reason for that was the domestic metal prices were at a significant premium, steel prices significant premium to the international landed prices. But that premium has now shrunk. So that's one positive news. The second positive news is the China reopening, right? And, despite what has happened post the reopening and the COVID outbreak, etc., the news from the Chinese government in terms of the opening up of the economy seems to be, very, very unidirectional. And that's a positive, that's one more positive news for the metals outlook. So yes, I would say that it, makes sense to be at least neutral, if not overweight on metals as well.
All right, neutral on metals and banks. People are going down the value curve as well. But the place to be in this morning, Mahesh, is the IT pack. The Nifty IT index is virtually at the highs of today's trading session. In fact, the move started from noon yesterday. And now that's percolating down to the mid-cap IT stocks as well. So among the top 5 F&O gainers, you have 3 of them belonging to the mid-cap IT pack. Intellect Design at the high point. We have Coforge, which is showing some gains as well. Emphasis and Persistent. All of them are spiking as we speak. IT was a serious underperformer last year. A lot of people believe that by virtue of its own underperformance, it makes it an easy bet this year. Would you back that view?
I have come across this view, myself as well, but we don't think we are there just as yet. Because while the sector has underperformed, but if you look at the valuation, they are still significantly higher. And the second point that I think is that while the margin-related risks are now well priced in, my belief is that the revenue, the potential revenue disappointments are not priced in well. We haven't really seen any revenue downgrades as such. And my sense is that, when the budgets for CY23 gets firmed up from the US corporates, we will probably begin to see a slightly softer mood and some revisions on the downside. So my sense is that it's too early to jump into the IT sector. I would still keep it as an underweight. And one of the big sort of thing that we are looking out for is the hiring trend. We have seen a significant slowdown in the hiring by the large IT companies. In fact, the latest data that we have, which is for September quarter, we saw the September quarter hiring was actually at almost like a 8-9 quarter low, and in fact lower than the pre-pandemic September quarter as well. So, in that sense, what the managements are effectively telling us through the hiring decisions is that the outlook is somewhat uncertain. So I would not jump into the IT names just as yet.
Okay, so you wouldn't jump into the IT names just as yet, and PSU banks are looking like a good bet for you. Where else are you going to put money in, Mahesh, this year? There's been some really good pockets, whether it's defense has come back in a big way, capital goods, infrastructure is what everyone is talking about now. Even the bankers were telling us that corporate capex is back in a big way. What are the pockets that you like?
Yeah, you're right. Industrial segment, is looking good. And one of our favorite sectors, real estate, last year was a relatively bad year in terms of the stock price movement. So mind you, bad only from the stock price movement perspective, but the fundamental data points, whether in terms of the new pre-sales, project launches, etc., has been very, very encouraging. And I continue to believe that the higher mortgage rates will not come in the way of the property cycle recovery that we've been witnessing now for the last 2 years. We are just about going to be entering the third year. And I think it's going to be a multi-year upcycle. And while the fundamentals have continued to surprise on the positive, the stock prices have not, because investors, especially the global investors, have this perception that higher rates, higher mortgage rates, higher interest rates is bad for property sector. And while that's true globally, that's not true in India, and we've seen it. But now, as the rate cycle is close to peaking out, I believe the investor interest will come back into that space. So property sector, the developers, space is a small sector, but looking, it's looking very, very interesting to me, especially given the fact that the stocks have also pulled back reasonably well.
All right, Mahesh, stay with us. I want to now put out some data, which, and I want your kind of view, want your opinion on this. This is, the market laser segment that we sort of put out for you a little later than usual. We usually try and do it before markets open. Let me sort of point to this sort of data on the wall. As you can see, what this data shows you is the last 7 years. 2022, of course, the clock is still ticking on 2022, so the number could change. But for the year, we are up in rupee terms 5%. Go back and look at the returns all the way from 2016. This is the 7th straight year of gains. If we end with, anything over 0%, in the positive, it's the 7th straight year of gains, and we're up 5%, right? 2016, we started at 8,000 levels. The closing that year was 8,000. From 8,000, we are at 18,000 over the last 7 years. Now, why is this important, and why are we putting this out? This has never happened before. I went back and looked at the 32 years that Nifty has been trading all the way from 1991, and we've never had a clean 7-year consecutive run on the Nifty. This is the longest stretch that we have. The previous kind of stretch that we had was between 2002 and 2007. But those were 6 years, right? 2002 is when roughly the bull market started. It kind of extended all the way till the global financial crisis of 2007, 2008. That was a 6-year stretch. In the 32-year history, that was the longest, and now this tops that, the 7-year stretch that we just kind of pointed that out. What are we trying to say here with this data? Nothing profound, nothing, no deep analysis, but simply this, that when you hear people say that 2022 has been tough, yes, it has been tough. Remember this, that, it's outperformed, 2022 in India has outperformed the world by a margin. And number two, there is the 7-year sort of history as well. Continuous, never before seen positive returns. Now, cycles, right? Now this is not a cycle that's happening for the first time, but, this is sometimes a simple but powerful way to analyze things. Now, I'm not saying that 2023 has to be poor or anything, but just keep in mind that given the backdrop, the 8,000 to 18,000 journey, 7 straight years of returns, and with the tough global backdrop, it's not going to be a clean one-way kind of move. Expect sort of a turbulence, expect some moderation in expectations, some moderation in returns that you should be absolutely fine with. So, just a quick piece there that I wanted to put out. Mahesh, I don't know if you have any thoughts on this, if you looked at these kind of numbers, but if you do, please do share your views.
Yeah, I definitely have thoughts on this. You're absolutely right in pointing out that last 6-7 years have been extraordinary, and we've seen pretty decent returns. And last year has been particularly fantastic from Indian stock market point of view. All the global markets, including the developed markets, have corrected. Even the S&P for the year, I think, if not mistaken, is down about 12-13%. From the peak, it's down even more. And India has withstood quite well. Now, going into CY23, I think we have to obviously keep in mind the global backdrop as well. I think there are two things that I want to point out from a global standpoint, which should be positive for Indian markets in general. One, we are looking at, as I mentioned, the rates, the US dollar rates, Fed rate peaking out sometime in 1Q CY23, and which basically should mean that the US dollar strength should also peak out. In fact, we've already seen the DXY has corrected by about 8-9%. But I think the theme for CY23 will be dollar strength peaking out, which is usually a good news for the EM currencies and EM markets. Because when the dollar sort of peaks out, we see some money flow coming into the emerging markets. That's point number one. Point number two is the China opening, right? And what is really interesting is that despite such a massive COVID outbreak, the government is pretty keen on opening up, and there are more and more positive news flows coming out. I think that's also a positive news for EM markets, because that's ultimately the largest EM market, and if that is going to attract investor attention, then the EM as an asset class actually sees some flows. So because of these two reasons, I believe that India has the risk of underperformance definitely going into CY23. But for somebody who's looking at Indian markets alone, we are not worried about whether we underperform S&P or global markets or Chinese market, etc. We have to look at what happens in India on an absolute basis. And I think if the EM markets are going to see inflows, India will see its share of flows, may not necessarily in line with what India's weight is. Maybe, as I said, India might end up underperforming. But the tailwind is that of foreign flows being on the positive side than on the negative side, which was the case in CY22. And I believe that if the foreign flows keep on coming in, the domestic flows, I don't see why it should turn meaningfully negative in any way. So that's the reason why I think it's a buy on dips kind of a market, and looking at the December 23 target of around 19,000, which is just about 5-6% higher. But yes, therefore I'm calling it for a buy on dips kind of a market.
Yeah, no, I mean, a dip raises return potential. And that point about EMs attracting money and we getting our 15-16%, which is the weight in the MSCI Emerging Market Index, I think is well made. Mahesh, thank you very much. The point that was very simple, just to kind of temper expectations, right? I mean, as Infosys used to do, guide lower and beat expectations. That's a much more pleasurable outcome as compared to, vying for higher and higher returns and then coming up short. So that was the entire point. Thanks very much, Mahesh. It's a pleasure. Happy New Year from all of us here once again, and we'll see you in the new year. On that Nifty return, sort of that for the last 7 years, I'll take that point forward later at 4:30 p.m. on the editors' roundtable. I will put some more data along with that 7-year number that we kind of highlighted just right now. So that's coming up at 4:30 post-market hours on editors' roundtable. But we've got our first management on the show joining us now. I think Century Plyboards, guys.
Absolutely. Before that, just want to point out that the mid-cap index is seeing a good run-up this morning. So almost a 220-point gain on the mid-cap index. And a lot of banks are moving around. So you have Punjab and Sind Bank, Bank of Maharashtra, IOB, RBL Bank, all the smaller banks that were perhaps beaten down last year. The mid-cap banks are looking pretty good this morning. But let's do one thing. Let us move on now and talk about Century Plyboard itself. Keshav Bhajanka, the Executive Director at Century Plyboards, joins us now to discuss demand trends, the outlook for the business, and how the new year is expected to shape up. Keshav, good morning and Happy New Year to you in advance. Thanks a lot for being with us through the course of so many years. Tell us a little bit about how you're, shaping up for the new year in terms of business. Is business looking good? Is growth coming back in a big way? If yes, what are the big corporate triggers for you in the new year?
Good morning. Wish you a very happy new year in advance too. I think, this quarter, the demand was slightly subdued across our segments. But having said that, I think we have performed reasonably well. As market leaders, we have been able to maintain growth, which is something that I think was difficult considering the circumstances. This was primarily due to inflationary pressure, but I think that going forward, demand on the ground should look robust. I think this was a short-term blip, maybe for 1 or 2 quarters, and going forward, we are still very optimistic about a strong Q4 and an excellent FY24 ahead. Having said this, I think for us, one of the biggest growth triggers is our expanded capacity in Hoshiarpur, which should come into play next month. And that should lead to a much stronger growth in the MDF segment, as we are already operating close to 100%.
Right. Thank you for joining in, Keshav. Again, season's greetings. You said that the third quarter demand was rather subdued. I mean, if you could give us a quantitative sense of how it was, because after your second quarter numbers, you said that the first half where you grew around 17% you were confident of closing this year well above that 20% guidance that you had. You've done well, but the quarter was subdued. Do you hold on to those, targets that you had alluded to?
Yes, definitely. We will definitely achieve those targets, and our aim shall be to better those targets. I think it was a quarter where we saw the peak of this inflationary pressure. The decision to go from a house to a home is one that requires a lot of thought. And I think that during this time period, the price of commodities such as steel, cement, everything had shot up to an extent where people were sort of deferring that action. However, a lot of these prices have corrected now. So I think Q4 will see robust demand on the ground again. And next year, considering the home sales, the house sales numbers that we are seeing, particularly in residential real estate, I think next year will be very strong.
Okay, but you also started by saying that the industry demand is muted, although you are the market leader, so you're doing pretty well. Do you reckon that there could be some catch-up on the downside? I mean, are you looking at perhaps a slowdown in demand compared to what you've seen in the pre-COVID levels? Maybe not now, maybe in FY24. And if yes, what could the average growth be?
I think our objective for growth remains 20% year on year, and we have multiple growth levers. As you know, we're the only company that is present in all these segments, in plywood, laminates, MDF, and particle board. Our new capacity, which has come on board in Hoshiarpur, which is about a 60% capacity addition to what we already have, is going to be a big growth lever for us going forward next year. We also have an expansion in the laminate capacity that is coming up, and number of brownfield expansions in plywood. So I think all of these are going to help us maintain our growth trajectory, and next year we should be looking at robust growth as well.
Right. You have given us a long-term target, total revenue target of close to 6,500 crores by FY27. We'll take it 1 year at a time. You said that you also briefly alluded to inflation, but there has been a correction of what, 10 to 20% in chemical costs. So what about timber, phenol? Have you cut your prices, the prices that you charge to consumers?
I think, there has been easing in certain raw material costs, such as chemicals, as you have already alluded to. But having said that, timber prices still remain somewhat high, particularly in the north. So overall, we have not taken any price corrections, maybe a slight price correction in the particle board segment. But other than that, all the remaining segments, there have been no price corrections, there have been no price reductions. Margins going forward should be better on account of the correction in the raw material prices.
For the MDF segment particularly, you had a target of 6,500 crores of revenues by FY27. Do you hold on to that, or would you want to scale it in any way?
No, I think that figure is a little incorrect. 6,500 was the target for the entire company.
Sorry, for the entire business, yes.
So I think we are very, very well on track for the same.
Okay.
And our objective shall be to meet the same or to perhaps exceed it.
Okay, and particularly for MDF, what is the expectation?
So we are still very bullish on MDF. As you know, our new capacity in Hoshiarpur will be coming into play from next month itself. And we have a greenfield capacity addition in the state of Andhra Pradesh, which should come into play from H2 next year. So with both of these coming on track, because right now we're at 100% capacity, that becomes the obvious challenge for growth. But going forward, we are very confident that once these capacity additions come on stream, we shall grow at a robust pace in MDF as well.
Keshav, isn't there a lot of capacity coming up in MDF? Players, or is that not a concern? At least 3 large players are setting up new capacity.
I think, setting up a capacity and utilizing a capacity are two different things. Initially, when we had come up with our first capacity in Hoshiarpur, the same questions were being raised when we were new entrants to the market, how we would be able to gain market share. But I think the ramp up for us was the fastest in the industry. Again, going forward, considering our expertise in sales and marketing, our expertise in supply chain, in production, I think we will be able to ramp up perhaps faster than most.
Is there any other category that you're eyeing right now? You said you are you're present across the board when it comes to wood panels. There is laminates, there is MDF, there are plywoods, etc. But for home improvement, a lot of the larger home improvement players are looking at different categories as well. Are you eyeing any of them?
In our case, we're in a very peculiar situation where the growth levers within our categories are very strong. I think, I've spoken in the past about how China's production of MDF is 40 times that of India, plywood is 20 times that of India, particle board is 30 plus times that of India. So I think we're in a very sweet spot where within our industry itself, there is tremendous scope for growth. So I think, as a company, we have decided that for at least 3 years, we will not be looking at any other category. We'll be focusing on the same 4 categories which we are in today: plywood, laminates, MDF, and particle board.
Okay, all right. Keshav, all the best. Thanks a lot for joining in. Have a great year ahead. We'll speak to you again very soon.
Thank you, and wish you the same.
Thank you. Let's step into a quick break. Up next, Raj Nayak of House of Cheer Networks and Abneesh Roy of Nuvama International Institutional Equities will join in to discuss how 2022 fared for the box office. And later, we'll also connect with Pirojsha Sarkari of Gati to discuss latest trends in the logistics sector. Stay tuned.